Hello everyone, welcome back to this week's Technical Insights. Global stock markets are still being pressured by the US tariffs, even though Donald Trump said he expects trade deals to be reached with China and the European Union. Major US indices finished the Good Friday holiday shortened trading week mixed as we move into the second week of the US earnings season. The Dow Jones Industrial Average lost 527 points or 1.33% last Thursday to close at 39,142 points. S&P 500 gained 7 points or 0.13% to finish at 5,282 points. The Nasdaq Composite Index dropped 20 points or 0.13% to finish at 16,286 points. The 30 stocks Dow Jones Index was put down by United Health, 22% decline as the insurer's earnings disappoint. Nvidia also led the tech stocks lower, falling 2.87% last Thursday as it said it will record a $5.5 billion charge tied to the H20 processor export to China. On the other hand, we saw some good news from Netflix as its earnings report was better than market expectations. Banking stocks also performed well in their latest earnings result last week. We saw Goldman Sachs, Bank of America, and Citibank all beating market expectations. Even though Donald Trump said he expects trade deals to be reached with China and the EU, his other comments stating that his team is studying if they can fire Fed Chair Jerome Powell really shocked the market. The Fed Chair last Wednesday said that Donald Trump tariffs could drive up inflation in the near term and cause challenges for the central bank to execute its dual mandate of high employment and price stability. This led to a sell-off in major US indices, posting a losing week. For the trading week, the Dow declined by 2.66%, while the S&P 500 index lost 1.5%. Tech-heavy Nasdaq Composite Index dropped 2.62%, and all three US indices clocked their third losing week in 4. In Asia, Hong Kong stocks rebounded last Thursday, ending the holiday shortened week higher on expectation that China will roll out fresh measures to stoke domestic demand amid the external challenges from the US tariffs. Gains were broad-based, led by tech stock, property, and consumer sectors. The Hang Seng Index rose 1.61% or 338 points to finish at 21,395 points, while the Hang Seng Tech Index rose 1.9% or 91 points to close at 4,887 points. Premier Li Keqiang signaled that policy to boost domestic demand and consumption were on the way. He committed to facilitate exporter access to domestic market through the creation of sales platform for goods designated for overseas markets and to steadily advance the integration of domestic and foreign trade. Shares of Alibaba closed higher following the report, and its Taobao platform topped the Apple App Store download charts in 16 countries due to the increased overseas demand for direct purchases from Chinese suppliers amid the US tariffs. Major contributors to the upswing last Thursday include Tencent up 2%, Xiaomi up 1.2%, and Meituan up 0.8%. The gains last Thursday helped the Hang Seng Index recover some ground from a month-long sell-off, where the White House has outlined how China may face tariffs of up to 245% due to its retaliatory action. For the trading week, the Hang Seng Index is up 2.3%, its first positive week in 6, and the Hang Seng Index dropped 0.27% for the trading week and posted its 6th weekly decline, its longest weekly fall in months. Investors are waiting for a press conference scheduled today, where regulators are expected to outline their plans for expanding the opening up of the service sector. Hong Kong markets are closed for Easter Monday holidays and will resume trading tomorrow on Tuesday. Back to Singapore, our local market closed the week in the green after the 8.2% drop that we saw last week. On Thursday, the STI Index rose 57 points or 1.58% to end the week at 3,720 points, despite the US warning about its ability to control inflation in the face of ongoing trade tensions. This is STI's first winning week in 3. Our 3 local banks recovered well from last week's sell-off. DBS gained 73 cents or 1.82% to close at $40.83. OCBC added 31 cents or 1.98% to finish at $15.98, while UOB rose 67 cents or 1.96% to end at $34.80. Top gainer on the STI last Thursday were DFI Retail Group up 7.59%, Jardine Matheson Holding up 3.43%, and City Development up 2.18% respectively. In company news, we also saw Nam Chong surge nearly 13% after the company secured a multi-year offshore support vessel charter contracts worth around 317 million ringgit. As the trade turmoil continues, it's becoming harder to predict where the market will move. with new announcements coming from Donald Trump every other day. So for this week's technical analysis, let's look at the top gainer for last week, DFI Retail Group. Last Thursday, DFI Retail Group share price rose 17 cents or 7.59% to $2.41. For the trading week, DFI share price jumped more than 11% after suffering a 2-week decline. From the chart, we can see that DFI share price has been on a strong uptrend in the second half of 2024 during the August to November period, where it rallied from a low of $1.71 to a peak of $2.61. DFI current year-to-date high was seen on 27 March, where it hit a high of $2.47 before declining to the year-to-date low on 9 April at $2.02 due to the announcement of the US tariff war. Last Thursday closing price at $2.41 was also testing the 11 February high at the same level. The immediate support for DFI share price can be seen at the amber line over here, which is the 100 days moving average now at $2.30, with the 50 days moving average in blue nearby at $2.25. Resistance level can be seen at the year-to-date high of $2.47, which also coincides with the upper bound of the Bollinger Band, now at $2.48. If we break above this level, the next resistance level would be the December high that we see here at $2.61. Looking at the indicators, you can see that the MACD turned positive last Thursday when the MACD line crossed above the signal line. This confirmed that DFI share price have a change in direction from the downtrend that we observed since the early part of April. The latest reading on the RSI last Thursday at 60 points is also a healthy reading, indicating that the current uptrend rebound is still strong and likely the momentum will continue to go up further until we hit the 70-point overbought level on the RSI indicator. With the MACD signaling that the rebound last Friday could be the start of a new uptrend and the RSI signaling that the rebound is still strong, investors may use the 100 days moving average at $2.30 to accumulate on DFI shares, targeting the upper bound of the Bollinger Band at $2.48. On the longer term, we also saw 8 analysts covering DFI stocks with 6 strong buy calls and 1 buy call, and there are no hold or sell recommendations. The 12-month target price for DFI is $2.90, with the maximum estimate at $3.30 and the minimum estimate at $2.32. And these are the updates that I have for you this week. If you find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.